Continues to tumble. In fact, the Brent crude is now at that $53 per barrel mark. Nymex is anyway at $42.50 per barrel mark. It's sitting at a 6-year low. So Nymex has even taken out the January low and it's now at a 6-year low. All this is because we got, very high inventory data coming out of the American Petroleum Institute. So inventories rose by 10.5 million barrels in the week ending March 3rd in the U.S. That was far more than the 3.8 million barrels inventory increase that the street was forecasting. The fear is that perhaps we will see increased supply from Iran if there is progress on the sanctions between U.S. and Iran. So all that is raising fears about a supply glut. Jonathan Barratt, the economist and CIO of Ayers Alliance, now joins in. Hi, Jonathan, and good to see you in. $53 per barrel is here on Brent. We're at 42.5 for Nymex. Where do you see, Nymex as well as Brent headed just in the near term? What would your forecast be?
I think at the moment there's so much negative news out there that you can only think to suggest that it'll continue to go lower. We've certainly looked for prices to be higher than these levels for some time, basically because they are so low. But given all of a sudden the increase in supply, the potential increased supply from Iran, you can only help but think that prices will be going lower from here. And I only think the thing that can arrest it will be some geopolitical concerns, coming out from, say, the Middle East. But at the moment, I think it all looks quite weak, the whole complex.
Hi, Jonathan. Thanks much for joining in. If I look at the chart from June last, Brent as well as Nymex prices have almost halved. Additionally, now in Q2, the demand is seen to be traditionally weak. It's the end of winter. There are scheduled refinery shutdowns because of maintenance. Add to that the fact that OPEC has said that they're reluctant now to, prop up prices. How will then in, Q2 prices pan out? I mean, is there a floor for prices already given the weak to stable dollar?
Well, I think that we have to start to think that a floor will start. We'll have to start to think that we can put a risk premium into events occurring. But when you look at the supply scenarios that are out there, there's no real unseen event that will actually see prices actually steady off. There is this potential for a larger sell-off to continue. Given the economies are not responding the way we should expect them to respond, given all the stimulus. And that, to me, is a concern. I think one of the other major concerns is the OPEC nations, those weaker OPEC nations, might start to have to produce for cash flow purposes rather than for actual demand purposes. And I think that, to me, is a real issue if prices remain relatively weak. Those OPEC nations, weaker ones, might just have to supply to anyone so they can get cash flow to help their ailing economies.
Jonathan, let's talk a bit about supply. There is some progress made, with respect to, the sanctions against Iran. If they're lifted, what could be the kind of supply that we will see on the back of Iran, and what will it do to the demand-supply equation?
Well, I think when you look at Iran, that's another one of those economies which is cash-strapped. And given the okay, given the green light to produce, you could see an extra 1 million barrels actually start to come onto the market. And when you see an extra 1 million barrels coming to the market, when you've still got, sort of significant supply coming out of the oil shale, when you see economies not performing the way they should, that's going to be just another, thorn in its side for price stability. So yes, another million barrels on the line, and prices will remain relatively weak again.
And Jonathan, what about this, the big Q, which is the FOMC meet? If the rate hike is pushed back, it would cause, you would see some bit of weakening in the dollar itself. But would the impact for commodities, especially crude, be limited just in the short term?
Well, I think this is a very interesting point because, when we look at the commodity complex, it's been as a result of stronger US dollar, a lot of it. We certainly have seen reasonable demand in some of the other primary input markets, such as iron ore. But the US dollar has been relatively well bid, up to a 12, 13-year high, and that's caused commodity prices to come under pressure. Let's see what happens with the Fed, because if we do see a turnaround in the trend for the US dollar, then that will provide us some support for commodities. We're all looking at the word patient, see what they say about that. But when you look at where inflation is in the States, it's relatively low and hasn't reached that 2%. I think the prospects for any movement here, I think, a little bit more remote. So I think the FOMC will come out, status quo will be the remain, and we won't get any volatility out of it.
Okay, I'll come back to, the issue about Iran, because that's adding to fears about a supply glut. You spoke about the potential for Iran to supply about 1 million barrels per day. If that comes through, what do you think the price will be? If today we get news that, the sanctions against Iran have been lifted, they've been in place since mid of 2012, so it's been nearly 3 years. If they're lifted and Iran can supply 1 million barrels per day, where do you see the prices headed?
I think it'll be a case of how fast they can lift the production. To me, that's a real key. And also, I think that the market is still quite conscious of what 1 million extra barrels will actually do. So I think, given the ability to produce it from Iran, I think is the key question. But let's see what happens. Between here and there's still a lot of time that needs to be pushed through. And I think you'll find the market's expectations will see it weaker. When you look at Brent contract at the moment at 54, WTI at 42, these are areas we haven't seen for such a long time. And I expect the volatility to continue. But I think one thing we could note and should note is that if we see a break towards the other side, if we see a break on the WTI through 45, Brent through 58, then that would cement quite a significant low. As to why that would happen, we don't know. But if in fact we do see that break, then that cements the low, and that's something that we're looking closely at.
You said 48 on Brent. Did I hear you clearly?
You did, yeah.
Okay, so there is a potential for Brent to head down to $48 per barrel, and that would mark a low.
Yeah, I think so, and I think there's just so much negative news out there, and we haven't seen anything on the horizon that's going to arrest that negative news. We thought that a reduction in supply on oil shale rigs would actually do it, but that's come to no avail. And when you look at the EIA data, it just shows more supply. So I think negative picture will prevail for the medium term.
All right, Jonathan, we'll leave it at that. Thanks so much for joining in. So that's the view coming in from an expert. Crude prices likely to stay under pressure.